What's up everyone, it's Scotty with Money Investing. So here with another market open live stream. We are still pre-market right now and we are seeing a little bit of a pullback for the equities. So the Nasdaq and the S&P are seeing a mild pullback right now pre-market, and of course cryptocurrencies are on a full tilt with a lot of cryptocurrencies down. So Daniel, welcome on board. Vish, welcome on board as well. Good morning, good morning. Good morning, good evening, wherever you guys are watching from. So just let me know in the live chat if you guys can hear me and see the screen without any issues. So I hope there's no technical difficulties. So Chad, welcome on board. Hey, good morning from watching from the plane. That's awesome. Vish, where are you traveling? That's incredible. Key Pauline, good morning. Chad gives me a thumbs up, so I think we should be good. That's perfect. The shower, welcome on board. So Daniel says all good, perfect. So yeah, the Nasdaq down a little bit from pre-market highs. So we've sold off a little bit closer to 0.5%, and closer to 5 basis points is how much we're up. And the S&P 500 is up a little bit more than the Nasdaq, up over 33 basis points as well. Peter, what's up? What's up? Thank you so much for joining in. Waiting for this all weekend. Tell me about it. I really don't like weekends at all. It's like, you don't, other than doing some research and, catching up on some other work, it's just like the markets are closed. It's like there's no fun. Right, so Vish says going from New York to San Francisco, had an interview at NYSE. That's awesome. That's incredible. Congratulations and safe travels. So the VIX is coming down a little bit, but you'll notice that we did get up to as high as 21.82. So we were trading at a much elevated level. We were higher on the day. So at one point, the VIX was up over 6.7%, but we are starting to come back down a little bit. And the VXN, you'll notice, is pre-market, we're pretty much flat. Well, this is also delayed a little bit, so we'll see where it opens. But again, if we do get to as high as 25.6, 26 levels, then of course we can see the Nasdaq also come down a little bit. This right here is going to be the US 10-year yield. So again, this is going to be ticker symbol US10Y on your TradingView platform. You'll notice that we have been trading inside this downtrending channel. So the one thing that it's been doing is that it's been forming these lower highs and these lower lows, and a perfect retest of those lower lows here. In fact, we even came down to as low as 1.354 on the day. So if you go over to the 30-minute chart, you'll notice that we had a significant drop for the yields. As soon as the markets opened here at 9:45, 10 p.m. last night, going into 11 p.m., and then boom, a solid recovery back up to inside this downtrending channel, which is why we're seeing kind of like the Nasdaq being down a little bit more than the S&P 500 and the Dow Jones. So yes, we'll go over AMC, we'll go over NEO, we'll go over a lot of different stocks here, but definitely we'll go over a lot of individual stocks, but just giving you guys a broader market update on everything, right? The yields, the VIX, the VXN, and all these different things. So dead cat bounce today before the bloodbath this week. That's a great question. We'll see. I mean, we've got at 8:30 a.m. we've got the 10:30 a.m. we've got the St. Louis Fed President Jim Bullard also speaking, and he's the one who actually did pencil down a rate hike in 2022. And then tomorrow we've got Jerome Powell speaking. We've got the GDP numbers coming out later this week. That's going to be the third estimate for the first quarter GDP, and there's not a huge amount of catalyst, but still there is going to be some catalysts that do come out. And considering the chart for the 10-year yields, and this is what's happened in the past, you'll notice that we have just consistently traded inside this downtrending channel, and right now we are kind of hitting this lower low. If we do see a reversal for the yields back up to this lower high at close to 1.589, then of course that can result in the Nasdaq also pulling back. However, this is the chart that we have talked about in one of our previous videos. I do strongly believe that we are seeing the Nasdaq's outperformance a little bit more now in the future. Pre-market, we are down slightly 29 basis points right now, trading as low as 0.82. But eventually, I do see this chart kind of breaking out to new all-time highs beyond 0.87, 0.86. You'll notice that we actually, continuing a bit. So you'll notice that the Nasdaq was actually trading at a much higher level. So earlier we were up at a much higher sort of a percentage gain. So the Nasdaq pre-market was up over 60 basis points as opposed to the S&P and the Dow Jones, which was up only I think 30 or 40 basis points. And even the Nasdaq futures, you'll notice this NQ1 right now up over 25 basis points. This was actually up over 60. and the S&P 500 futures were only up 30 basis points. Now you'll notice that it's reversed a little bit, with the Nasdaq up only 24 basis points, the Nasdaq futures, and the S&P futures only up over 40 basis points. I think the reason that is because of the reversal that we saw on the yields. So the 10-year yields, that's the reversal we saw. So they were selling off, so Nasdaq was pushing higher, and then as soon as we saw that reversal for the 10-year yields, they flipped, right? The Nasdaq now is the one that's actually underperforming the S&P 500 once again. So, all right, Dave, welcome from Virginia. So look at Snap, seems to break out over 64.38. So yes, we'll go over all these individual stocks as well, but just to give you guys an update again, for everybody who's new joining in, the VXN is on its way potentially to trading as high as 25.63, and the VIX also was trading much higher, but right now we are starting to pull back a little bit, back down to 20 levels, and we're down a little bit over 2.27%. Cryptos, of course, are selling off as well, with Dogecoin down over 18%, Bitcoin is down over 8%, with some new comments from China as well, and Ethereum is now once again trading under $2,000 per coin per Ethereum, and down over 12.5%, almost 13%. All right, let's take a look at Snap first. So Snapchat, trading is at 63.30, up about 21 basis points. So there is a very clear sort of resistance here for Snapchat at closer to 65.50-ish level. So that right there would be the resistance. I would watch for Snapchat. Again, resistance here, resistance here, resistance here, and that would be the potential breakout if we get one on heavier volume for Snapchat to see some more follow through. Ideally, I would want this breakout to come through and then that level to start acting as a new support before we make the next leg up higher. So SNE, I would watch 65.50 as the next resistance for Snapchat. Let's take a look at Neo. So, all right, Cosmin asks, what do you think about the Michael Burry crash possibility? That's a great question. We also addressed this in our Discord this morning. So, he basically mentioned that there's a crash or there's a bubble across, all asset class and everything by 2 or 3 different magnitudes. So, I disagree. I mean, there's specific sectors or pockets in the markets where you can make a case that yes, there's a bubble. But if you were to basically say that there's a bubble across all asset classes, I think that's a little bit of an overstatement, only because I personally believe that if you were to compare the markets today with where we were back in 1999, 2000s, the markets have a lot of breadth and a lot of earnings potential behind it. When you look at those technology names, yes, they're trading at a premium. Yes, they're trading at, you can make an argument that they're overvalued, but they also have a lot of revenue potential, a lot of earnings potential, so to speak, in the future. So even if we do see some type of a pullback or a correction in the broader markets, there is going to be a valuation reset every time we come down. Same thing happened with March, in February and this year, is that when these, blue chip companies come down, the valuation becomes more attractive, and that's when people start buying in. Now, there could be specific asset classes that he could be referring to. I don't want to get into too much about the real estate or Bitcoin or cryptocurrencies in general, altcoins. And what I mentioned in the Discord is that fear can get translated over to other markets as well. So if one bubble pops in any of the markets, that fear can get translated over to other markets as well, even if they're not, overvalued or in a bubble, so to speak. So I think he has to be very specific, Michael Burry, when he's talking about a potential crash or a bubble. Like, what market is he talking about, and what is the time frame? Because if you don't have those two things, if you don't specifically identify which sector or which asset class or which market he's talking about, and over the course of how much time, then that's just a prediction without any sort of guidance or any type of a target, in my opinion. But anyway, so NEO is up a little bit over 19 basis points. We're trading exactly at $47 per share. So 46.30 is the near-term support. So that right there is going to be the level to watch for NEO stock, all the way as low as 43 bucks. I think Tesla was also up pre-market. Let's take a look. So we're slightly down about 5 basis points, and this right here is kind of like the bear flag, that we're forming once again. So in the short term, yes, there's a bear flag forming, but in the broader scale of things, there's like a descending triangle forming, or kind of like a bullish sort of pennant, so to speak. Bullish triangle also, because the prior trend was up, and now we're starting to form these lower highs, and we're just forming a horizontal support at 545, 547. So yeah, if we do kind of continue to kind of fill in this channel, then eventually I do see a breakout over $651, $650. That's the most important resistance level to watch for Tesla moving forward. All right, so let's take a look. Um, so will you be covering the Fed speech this morning? It's gonna be at 10:30. That's when the president of St. Louis district. So there's 12 districts. We've covered that in the Beige Book. In the United States, there's 12 districts, and St. Louis is one of them. And the president, which is Jim Bullard, he's going to be speaking around 10:30 a.m. It's going to be too late for me to cover it, but I'm sure someone else will certainly be covering it on YouTube if you want to jump on their live stream. But I will only be live for like few hours. Going over the different market sectors here. So we'll talk a little bit about the broader markets such as the S&P, the Dow Jones, and the Nasdaq. We'll cover a little bit of the cryptos. We'll cover the VIX, the VXN. We'll cover the yields. We'll cover our select sector indices as well. So you'll notice that the yields have just been pushing higher here, up over 2.72% since 5 a.m. So that's been the rally. That's what's causing the Nasdaq to come down a little bit. And that's it. But tomorrow Jerome Powell's speaking, so maybe we'll do a live stream for that. And then of course the GDP report's coming out. And in terms of earnings, there's not a lot that's going on. Let's take a look at FedEx. And Amazon Prime Day also begins actually today, so it began at 3 a.m. Eastern, so just about 5 hours ago. So very, very excited about that as well, because Amazon is a company, one of the companies that I'm actually long on. My price target in the short term for Amazon is well over $4,000. And a lot of analysts have actually upgraded their price target to well over $4,200, $4,300, even as $4,500. All right, so FedEx recently broke down below its trend, so we are certainly trading below those moving averages, and that's one of the things that I want to put emphasis on. For individual stocks, it's so very important to kind of trade with the trend, right? So you'll notice that earlier, FedEx was perfectly validating some of those moving averages. And perfect examples can be stocks like financials, right? It's the banking sector. So I'll come back to FedEx in just a second. But just to give you guys an example, Bank of America had a perfect uptrend pattern. So we were just consistently validating those moving averages until finally we saw kind of like this inflection point where we broke down on June 17th for Bank of America. And then the selling pressure even accelerated. So on that day, we were down a little bit over 4%. Then on Friday, we were down another 2.5%. Same thing happened with Wells Fargo. So consistent uptrend, validating those moving averages. Boom, boom, boom. This is a good uptrend. Everybody investing in Wells Fargo is happy. But then this right here was a breakdown, right? That's the trend reversal, is what we're seeing below those moving averages. So when this happens, this is kind of like a shift in the pattern. And for us to regain that momentum, Wells Fargo, Bank of America, companies like Caterpillar that also had a significant breakdown below those moving averages, companies like 3M, most of those value companies need to kind of go back up and retrace back up those moving averages to kind of realign themselves in this uptrending pattern. Now, in my opinion, what we're going to see is a beginning of this downtrending channel for some of those value companies. So let's go back up to over FedEx. So in my opinion, FedEx with this breakdown below those moving averages, I would not be surprised if you do get a retracement, down to this 200 simple moving average, only because there is some weakness considering the moving averages, the 21 EMA, the 50 EMA sitting perfectly at 295, 298, $300 per share. So that right there would be the resistance level to watch for FedEx, kind of aligned with this previous resistance, and even in the past we've gone rejected at this very level for FedEx as well. So that right there would be the resistance level to watch. And of course, depending on what they announce when the earnings are released, we could see a retracement back up to that level. But that right there would be the range I would watch for FedEx in the near term, kind of like this 270, 272 level, aligned with that 200 SMA, all the way as 295. Oh no, Powell is speaking. Market's gonna dip. Yeah, I mean that's been kind of like the narrative, right? He's every time he's spoken, the market has gone down. So good morning. I bought the dip on BCH at 475. See how it goes. Good morning to you too. Let's take a look at BCH very quickly. So BCH is Banco de Chile. I've actually never looked into this stock, but it looks like it's definitely been selling off consistently from March 24th. We are down over 22%. And right now we are trading again below those moving averages. So I would be cautious with this one, again, depending on whether this is a swing trade or a long-term position. There is definitely some higher lows being formed, and there's also some type of lower highs being formed. So that could be like a symmetrical triangle, and we could see like a break in either direction. Now the probability for a breakdown are slightly higher only because the prior trend is a down. So we are coming from a prior sell-off, and now we're starting to form this symmetrical triangle. So the probability for us to see a breakdown is slightly higher versus for us to see a breakout to the upside. So that's just something that we need to consider. All right, so let's take a look at. Oh, he says, oh, Bitcoin Cash. Okay, all right, so Bitcoin Cash, because I typed in BCH, it came in as this. All right, that makes sense. That makes sense. Then you can just scratch the analysis on whatever this company is. All right, let's take a look at Disney. So Disney is actually a good prospect here. So I think I do have some analysis on the crypto chart. All right, yeah, so Disney is actually one of the companies that I'm looking into very closely right now, only because there is a neckline at close to 166. So you'll notice that this right here is a strong support, kind of like a neckline in this head and shoulders pattern. So if I were to identify that very quickly for Disney stock, you'll notice that this right here was kind of like the left shoulder. This right here was the head, and right now we are forming some type of a right shoulder, and this of course is the neckline for Disney. And that's also going to be aligned with this 200 SMA. That's going to be this blue line, the 200 simple moving average, which will eventually get aligned with the support or the neckline at close to 167. So that would be kind of like the first entry point if you're looking to get into Disney. And again, the pattern is still a little bit bearish considering that we're trading below those moving averages, and we're potentially kind of curling back down to this $167 support. But again, I want to mention that from these head and shoulders pattern, the tendency or the probability for these patterns to break down below the neckline is quite high. We've seen that time and time again for a lot of stocks that I can go over. So like Peloton was one example, same exact thing. So left shoulder, head, right shoulder, we saw a breakdown of over 14.5% below the neckline. There were companies like Nano Dimensions, I believe, also had some type of a head and shoulders breakdown below that level as well. And just a lot of companies that have followed the same trajectory when it comes to that head and shoulders pattern. But it doesn't have to be that way. Very well, I can also show you guys example on when companies have actually come down, retested that support and then rallied even higher. So perfect example could be Square. Square, you'll notice, also had some type of a head and shoulders pattern. So, left shoulder, head, right shoulder. Instead of breaking down below this neckline at close to 200, we actually did rally back up to 237, 240. I feel like there's a lot of like complete shoulders forming in general. Yeah, so there's a similar pattern forming for a lot of companies. Another one that I can go over is AMD. So that's going to be Advanced Micro Devices. Same exact pattern. You'll notice left shoulder, head, right shoulder, and in fact we didn't actually break down at that $74 support, right? So it doesn't always have to break down. Usually when these head and shoulders patterns form, the probability is that we see a breakdown, but it doesn't always have to happen. Instead, what we saw was an uptrend, then we saw a bull flag, and then a breakout above that $84 resistance and the 200 SMA. So that's something to consider as well. So yes, we can take a look at Fubo as well. In fact, I actually posted an update on Fubo TV over at our Patreon over the weekend. So we do have a trade set up on this one as well. So right now we're up a little bit, just about 1% on this stock. And the reason I like this so much is because of the bull flag that we're forming once again. So I actually, with respect to our Patreon members, I'm not going to be going over Fubo TV here in this video, but I'll definitely do an update on this stock in the future, definitely moving forward. So, all right, let's take a look at NVIDIA. So NVIDIA is actually down over 1%, right? So this is what we were expecting from NVIDIA. I highlighted this kind of like a hammer candle hitting higher highs inside this uptrending channel. A lot of buying momentum coming in for NVIDIA. It's up from 540 all the way to highs of $770, right? So we're up just over 42% for the stock. So, in my opinion, this is overbought. It's no surprise the RSI, the MACD is trading at an overbought level. So I would be very cautious with NVIDIA if you're someone who's actually buying at these levels. Just be mindful that you are paying a significant premium at these prices for NVIDIA stock. And there's a little bit more room to the downside for NVIDIA to maybe retrace down to like 680 or 650 levels. All right, so the NASDAQ is now turning red. We're down about 1 basis point, and the S&P is still up over 34, and the Dow Jones is actually much higher, up closer to 0.5%. Let's take a look at the yields. So now we're up over 1.16%. So we're seeing that momentum for the yields to 1.46. So definitely we're seeing that momentum. And if we do make our way back up to this level, so that right there is going to be kind of like the lower high. So right here, that right there is going to be the resistance level to watch inside this sort of like a downtrending channel. And if that happens, this might be another one of those weeks where the yields push up higher, continue to make these lower highs and lower lows. But for us to get up to this lower high, that's going to be some momentum to the upside. That's what's going to cause the Nasdaq to actually come down a little bit more. The VIX is down about 1.5%. Let's take a look at VXN. So VXN still delayed a little bit, so it should be delayed by 10 minutes. I don't know why it's not showing up, but again, 20 is going to be the support level, 25 is going to be a resistance, and for this one it's actually flipped. So I have the resistance in green and the support in red, as opposed to any stock that we go over. You'll notice that the resistance is usually in red and the support levels are in green, because when you're actually buying into the broader markets, you're going to be buying when the VIX hits some type of resistance. So that's like a green light for us to go ahead and deploy more cash and buy more. Because when the VXN was hitting these levels at 30, 32 levels, that's your signal to go long on the Nasdaq, right? Because we're hitting overbought levels, we're pretty much spiking for the VXN, and as it comes back down, that's when the Nasdaq would rally. Mighty Trader, what's going on? Welcome. I wonder what the 40 million shares was on Friday. For what stock? Which stock are you referring to? Let's take a look at Airbnb. So Airbnb is, so again, a very similar pattern here. So we had like a descending triangle for Airbnb, and then we saw a significant breakdown to the downside. So if I were to kind of highlight that very quickly, you'll notice that this right here was the triangle for Airbnb. So lower highs, and this right here was kind of like the horizontal pattern, and then we saw a breakdown below that level, came all the way down to a support of 130. Pushed up, consolidated, validated at 145, pushed up even higher. So the next resistance is going to be very aligned with that $154 level. That's going to be kind of aligned with that 50 EMA and the 50 SMA as well. So those two moving averages, and all the way as high as this resistance at closer to 167. So again, previous support that we broke down below is going to act as a backtested resistance moving forward for Airbnb. But it has a strong uptrend, right? So it has a strong uptrend pattern making higher lows. So we're definitely, the demand is there. We're not going as low as we did the previous time. So that's good. Aaron, what's going on? Welcome on board. Yeah, so Airbnb definitely has a lot of upside in my opinion too, as the economy reopens back up. And as more and more people, take vacations, there's going to be significant demand for Airbnb. We're going to see that jump in sort of bookings, and of course, that's going to translate over to higher revenues as well. It's just the pattern needs to kind of break out over those moving averages to kind of recapture the uptrend once again. So, with every uptrend, the moving averages is perhaps the most important thing, because in every uptrend, if it retraces back down to the 21 EMA or the 50 EMA, that's kind of like the buy the dip opportunity for that stock. But if you're trading below those moving averages, it's no longer a dip; it's a full-blown correction for the stock, and you want to wait for some type of a confirmation for us to break out over those levels once again. All right, let's take a look at AMC now. So AMC is going to be, I think it's up a little bit over 4.29%, so breaking out over $60 per share once again. So we did an analysis on it over the weekend. This was one of our swing trades that we took. Again, this was a bullish pennant, or the bull flag, and this is a perfect example once again. So you'll notice that all these sort of like a descending triangle doesn't necessarily mean that we're going to see a breakdown to the downside. Similar to what we just looked at, right? Airbnb, you'll notice, was forming a same exact pattern here. So this was the descending triangle, but in fact we saw a breakdown for Airbnb versus AMC, which is breaking out to the upside. So the price target in the near term, at least for this week, still sits at $77. And the last time I checked, I think there were like calls being written as high as like $145, $150 strike prices on AMD. So again, these moves are obviously, in my opinion, coming in as a result of a gamma squeeze as opposed to a short squeeze on AMC stock, because we're seeing a lot of call options being written, a lot of open interest, and a lot of volume on much higher strike prices. So when that happens, the market makers would without a doubt need to go into the open market and buy 100 shares in order to sell these covered calls. And that when they do that over and over and over again, they buy 100 shares, 100 shares, 100 shares. That leads to a gamma squeeze in the future, and that's what we're seeing. So $60 in my opinion is going to be the new support level to watch on AMD or AMC stock. So this right here is going to be the level as a new support, and the next target in the near term is going to be $77 is the volume also holds for AMC stocks. You'll notice that Fridays usually we have a lower volume day, so if you go over to this volume chart, you'll notice that we saw a declining volume coming in from Mondays here. So this was on May 27th. We saw that decline in volume. We saw a little bit of a pickup in volume over here, so a little bit of a volume picked up. But then on Friday, we kind of declined once again. But overall, you'll notice that the trend is still down. So we're not getting the same volume numbers as we did from like May 27th and even as high as like June 2nd. Right now, we are trading at a pretty low volume. Well, relatively speaking, because AMC usually trades at 800 million shares. And right now, we're trading at 243 million, which by any stocks comparison is still very, very high. But relatively where we were, a few weeks ago, it's trading at a lower volume. So we most certainly need volume to pick up because that's going to be the main driver for more upside on AMC stock. But the near-term price target is still going to be at close to $77. All right, so not sure. Eli, what's up, man? Thank you so much for joining in. I appreciate that. So AMC cash secured puts printing again. That's awesome. Congratulations. Do you look into the MJ market? Yes. So that's something that I'm actually going to be doing. It needs more research and a deep dive on my part. So I'm not too familiar with the current legality of what's happening, but definitely that's something that I'm going to be working on over the next few weeks to bring some more ideas to you guys for that market, because I feel like that is going to be one of the themes that we need to be focused on for the future as we get more and more legalizations in the US and all over the world. So yeah, that is definitely something I'm going to share my thoughts on in the future. Yeah, so please make sure to drop a like. It really helps out the channel before I forget. So we've got 53 likes. Let's see if we can at least get up to as high as 100 likes. So Mighty Trader, thank you so much for mentioning that. All right, let's take a look at the broader markets here very quickly. This index continues to fall a little bit, down about 37 basis points. We're trading as low as 0.82. And the NASDAQ continues to see this downtrend here, down about 4 basis points now. And the Dow Jones is up over 0.5%. And the SPY is also up over 34. So we're seeing this as a result of the yields. It's very simple for us to really pinpoint exactly why this is happening, because the yields are on its way higher once again, right? We did see a little bit of a sell-off, and then starting 2:45 in the morning, 3 a.m., we're seeing that reversal in the yields. So I think that's one of the biggest reasons. I did want to break down some articles here. So this was actually something that I was reading today. So beware of inflation headwinds. It could take a year to break even after a 10 to 20% market correction, economist Mark Zandi warns. This actually came out today, so June 20th, or yesterday, so June 20th, 5 p.m. Eastern, updated also a few hours ago. So Moody's Analytics Mark Zandi has a message for investors: brace for a significant market correction. That's what he said. The firm's chief economist expects a more hawkish Federal Reserve will spark a 10 to 20% pullback in the markets. And unlike the sharp drops over the past several years, Zandi anticipates a quick recovery won't be in the cards, particularly because the market is richly valued. He estimates it could take a year to return to break even. So reading further, so the headwinds are building for the equity markets. The Federal Reserve has got to switch gears here because the economy is so strong. He suggests that the correction may already be underway because investors are starting to get spooked. So yeah, let me know in the live chat what do you guys think about this as well, because I would love to hear what everybody else thinks. But the economy is going to be rip-roaring, unemployment is going to be low, wage growth is going to be strong as well, and Zandi has been ringing the alarm on inflation for months. Zandi asserted inflation was dead ahead and investors weren't fully grasping the risks. According to Zandi, it's still a problem affecting the stock market and bond investors, Sunday sees little chance that the benchmark 10-year yields will keep falling. So I wouldn't count on rates staying at 1.5% for very long, given what's going on. So I think its anticipation is for it to be much higher. So stocks and bonds aren't the only risk assets catching his attention. He also sees trouble brewing in the commodities and cryptocurrency sell-offs. Plus, he's worried about sustainability of a strong housing market amid higher mortgage rates. So when it comes to real estate, I know that, because of the lower interest rate environment that we're in, that's why we're seeing housing, go through the roof. But only time will tell how interest rate, of course, when they start going up, there's going to be tighter liquidity. There's not going to be as much activity when it comes to purchasing new homes and refinancing existing homes as well. So I could see like a slowdown, but whether we see a crash or in the housing market is still yet to be unknown, right, so to speak, like what the market is going to do in the future. But yeah, let me know in the live chat what you guys think as well. So I would love to hear what you guys think. So Hyro says dark pool is some institution bought 40 million shares of NEO at 46.98. That's interesting. If you have the source, feel free to share that with us, and I'll pull it up for everyone to take a look at it, and that would be very helpful. Yes, so yeah, if you guys can find something, I would definitely take a look at it. So, all right. So what was something that was in that article that was really interesting? I forgot what he mentioned. So inflation was one of the big concerns that he brought up. If we've broken down the inflation at quite length, and of course the biggest culprit for 1/3 of inflation is used cars and vehicles. That's what's driving inflation when it comes to total CPI much higher. And then of course energy prices, so gasoline up over 57% year over year, is what's really driving inflation when you're looking at total CPI to record levels, like almost record level, like multi-decade highs, over 5%. But the real question is, are these prices going to come back down, or are they going to keep going higher? Like if you think about commodity prices, lumber is already down from its peak. Copper is already down from its peak. Gasoline prices, even though they are running higher a little bit, so energy, when you look at WTI crude and Brent, we're trading at over $70 a barrel. So they're still trading at pretty elevated levels. In my opinion, this is, again, not sustainable. Like at some point, we are going to see some deceleration, some stabilization when it comes to inflation, and then start to see it come back down. And when that happens, then the Fed wouldn't need to raise rates faster than expectations, because right now, with inflation coming in hotter with both CPI and PPI, that's why the market is pricing in inflation rate hikes much faster than anticipated, right? 2022 is kind of like the narrative now as opposed to 2023, but I still think that we're 16 to 18 months away from like rate hikes in the future. So 2023 is when I personally believe. And the bigger problem is asset purchases, right? Tapering, when they're going to start tapering back and pulling back on the support moving forward. So, all right, so let's take a look at end phase. But MicroStrategy, I think, is going down quite a bit, because I think this is the biggest corporate company that has invested in Bitcoin. And they are actually down a little bit over 7% pre-market, with cryptos coming down substantially. So we're now down over 9%, trading just over $32,000. And this right here is kind of like the bear flag, so to speak, which is a little bit of a caution here, because usually, when we have consolidated so much, this could lead to a further breakdown below 30,000. If that actually does happen, then yes, Bitcoin's chart and the pattern can get a little bit uglier, because there could be some accelerated selling as well. I mean, Ethereum has a strong support at close to 1850 levels. Like we're almost testing our 200 SMA. Like we're literally at the 200 simple moving average, right? So, and in the past, you'll notice that Ethereum is consistently validated. I mean, the last time we saw a breakdown below that level was during the pandemic in March. And since then, we have just consistently validated that 200 SMA. We're like almost exactly trading at that level. So it's going to be sitting roughly at 1875. So 1875, close to 1870 levels. So close below that level is going to be a little bit tricky for Ethereum. I think the same goes true for Dogecoin. So we're down a little bit over 20%, trading just under 23 cents. So the 200 SMA is a long ways away, but it's got a really strong support at closer to 21 cents. So that right there is going to be the support level to watch for Dogecoin. So Mara 40. So let's take a look. Ride got upgraded today to $43 price target. That's good to know. Mara to $40. I believe NEO will hit all-time highs starting in Q4. So NEO, my price target is at $75 by the end of 2021. For those of you who've been following the channel, we've covered both the fundamentals and technicals on the stock quite extensively. So right now we're forming this pattern where we are, pushing higher, but we are seeing this minor pullbacks or a little bit of a retracement back down to the next support before making the next leg up higher, right? That's been kind of like the trend for NEO stock, and this right here was a successful breakout over all those moving averages, and which is why I feel a lot more confident with the NEO stock, continuing on this uptrend, validating some of those support levels along the way, while also pulling back at the same time. So nothing's going to go up in a straight line. We're still going to see some type of pullbacks before we make the next leg up higher. So now that being said, with the broader markets where they're trading right now, with the Nasdaq and the S&P, it's no surprise that we could see a little bit of a pullback as well for NEO stock, right? So 46.30 all the way as low as $43 are going to be two support levels to watch for NEO. All right, so let's talk about Enphase Energy. So this is also a stock that we have covered in the past. It's a profitable company growing at a very substantial rate in one of the faster growing industries, renewable energy and solar panels. The estimate is that they're gonna do at least $1 billion in revenue this year. The price of sales and the price of earnings are very attractive as well. So again, margins are over 17% for the company. So this is a perfect example as to what happened after the head and shoulders pattern, right? So left shoulder, head and a right shoulder, we saw a breakdown for Enphase down to 108. This right here was a rally, bull flag, and then a breakout over this $150 resistance as well. And the next resistance to watch is going to be sitting roughly at $173, $174 per share for Enphase moving forward. So, Alvin says, wait, I thought NEO stock just goes up. So yeah, we're going to see a little bit of a pullback along the way before we go to the next move to the upside. But Enphase Energy, the next resistance, so the target is going to be 174, 175. That's going to be the next level to watch, and the support level is actually going to be 150 for Enphase moving forward. So Shopify is another stock that we have covered on the channel. Absolutely incredible rally for Shopify. Just been coming from lows of $1,200 all the way to highs of $1,500 almost. We tested highs of $1,485 on Friday, and that's been a 25% jump, and that is the resistance now moving forward. So that's the resistance coming in from like February 11th. So we're just almost testing that target. And of course, it goes without saying that the RSI and the MACD are a little bit on the overbought side now. So it would make sense why we would get rejected at that level at close to 1,500 and see some type of retracement or a pullback, down to 1,280 or maybe close to like $1,400 per share for Shopify. All right, let's take a look at some other stocks. Let me know in the live chat if there's anything that you want me to go over. We'll take a look at it. We've got about 30 minutes for the markets to open. The Nasdaq continuing on this pre-market slide. So we're down about 2 basis points, so still pretty much flat. And the S&P is up over 40 basis points, with the Dow Jones most certainly up a lot more, over 60 basis points. All right, so let's take a look at PayPal. So PayPal is another stock that we've covered in our daily market updates. This is the uptrending channel. So you'll notice that higher highs and higher lows, and we broke out over 278, so we're almost trading at 282 right now. The next target for PayPal is at 310. That's the next resistance to watch, and my expectation is that $278 is going to start acting as a new support level for PayPal moving forward, all the way as low as these higher lows. That's going to be inside this uptrending channel, kind of aligned with those moving averages as well, sitting roughly at 260 or as low as $255 per share. All right, let's take a quick look at Clover Health for Adam. So Clover Health also is a stock that we covered in our previous videos. So right now we are breaking down below those moving averages. On the daily chart, however, you'll notice that we are perfectly testing our 21 EMA. So it's kind of hard to really understand, what's potentially going to happen with Clover Health because of the short interest and the squeeze and all those different things. But if you take a look at this yellow rectangle, right, this right here was the gap that Clover Health also needed to fill. So if I remove this entire trend line, you'll notice that we actually did leave a gap after this huge run up, right? So that right there was a gap between this candle on June 7th and this candle on June 8th. So usually when patterns kind of leave this gap, they come back down to fill this channel in, and that's what we saw with Clover Health. We came all the way back down to fill this gap. Now moving forward, if we do get a validation from the 21 EMA sitting roughly at I want to say $11.80, $12 a share, then we can potentially see a reversal. But again, considering that the momentum has been really downward, it's been selling off aggressively on the 4-hour chart. We're trading below those moving averages. There's no guarantees with Clover Health if we're going to see a break to the upside or not. So very simple pattern for Clover Health was also some type of a bear flag here. So you'll notice that we were forming some type of a bear flag, and then we saw a breakdown even further. So it was something like we sold off, formed a bear flag, and then we sold off even further, and right now we're just consolidating sideways. So support level to close to watch 11.80 at close to $12 a share, and the resistance is going to be closer to $14.50 for Clover Health. All right, so I'm going to cover a stock for Zoar. Thank you so much for being a member. I really appreciate it. So we're going to go over ZEV. That is going to be Lightning E-Motors. All right, let's go over to the daily chart here. So I like this chart only because of the recent trend that we're seeing. So in the past, you'll notice that we were just selling off. So this right here was kind of like lower highs and lower lows being formed. And again, this was continuing to kind of have this downtrending channel, trading below those moving averages. But recently, you'll notice that what's happened is that we have seen a bit of a rally here. And had a mild sort of like a bull flag for Zoar before seeing a breakout to the upside, and now we're seeing that pattern form once again. So depending on whether this is like a swing trade or a long-term position really depends on the fundamental analysis of the company as well. But if you were to kind of look into it from a swing trading perspective, this could be seen as a bull flag breakout in the future as well if we can get some more volume on the chart. And I would watch a strong support level at close to $8.20. So that right there would be the level to watch, because that's going to be below those moving averages. The 21 EMA is also going to be below that bull flag as well, and it lead to a failed breakout. Instead, it would lead to a breakdown, and that's what I keep my stop limit or stop loss. And again, I would not back hold this if you're swing trading this, only because the pattern has just been really down. It's been selling off, making lower highs and lower lows. So there's no clear sign of an uptrend just yet until after we see a breakout to the upside. So the resistance for this stock is going to be sitting roughly at closer to $9.40, and support is going to be sitting roughly at $8.20. All right, so do you think this year's Prime Day will do better than the previous one? It's kind of hard to say because the last one was literally 8 months ago. So they did one in October, and now they're doing one in June. The expectation is for them to still be much higher, but at a decelerating growth rate. So for Amazon, the expectation again is for them to, I think, grow by 18% year over year. And again, by year over year, we mean by from October till now, but at a decelerating growth rate because of how quickly they're doing it and because of the supply chain issues that we have right now across the world. So Zoar, yep, thank you so much for being a member once again. I really appreciate that. So all right, so we're seeing a little bit of the spike in the QQQs here, up over 7 basis points, and the SPY is also up over 44. Let's take a look at the yields very quickly. So yields are up even more, so we're up over 1.6%. We're trading as high as 1.467, and look at the momentum in the yields here, right? Continuing to push up higher. All right, let's take a look at the VIX. So it's coming down a little bit more, so we're down over 2%, trading as low as 20.28. And this index, again, down about 39 basis points. If you take a look at the 1 day here, financials are the ones that are up the most pre-market. And industrials, materials, discretionary, and of course tech is the one that's losing the most right now. So we just went over NEO like several times in the past. You can kind of go back on the live stream and watch the NEO analysis. We have gone over that several times. Crypto selling off, yes, it is. We went over that earlier. For Dogecoin, the next support is sitting roughly at 21 cents. And for Bitcoin, it's down a little bit over 9%. The next support is at 30K, so $30,000 is the area of demand. It's the level to watch. And Ethereum, the next support is going to be sitting roughly at 1875. Hold on one second. Let me grab some water. All right, so zoom out on the chart for Bitcoin. G, do you mean Bitcoin or which one? So for Bitcoin, I mean, it's for Ethereum, it's hitting that 200 SMA, and for Bitcoin, we're already trading it low at 30,000. That's the next support. Chug. Yes, I'll do that. I'll do that soon. All right, let's take a look at some other stocks here very quickly. So we looked at Fiverr last week. Let's see, so it's down a little bit over 8 basis points, and not really much movement, but my target in the near term is going to be sitting roughly at $230. This is also a stock that we basically mentioned in our Discord as it was breaking out. So this was, again, a very good example. And these are the charts that I want you guys to find as well if you're looking in the markets. Just look at stocks that have actually broken down from the head and shoulders pattern. And again, you know, the examples are so many out there in the markets right now because this just happened. This pattern has played out time and time and time again. You'll notice a left shoulder, head, and a right shoulder. We broke down below the neckline. We validated some type of a support, a rally, so you can actually catch this rally too. But the only difference is that this is going to be a little bit of a riskier play because there's no confirmation of an uptrend just yet. So you can have a tight stop limit if you want to take advantage of this trade, but just know that this may not happen. But this right here, so the breakout above that bull flag is a much better play that has a more probability of a successful push to the upside. So we saw an uptrend consolidation here, trading above those moving averages, and 2 really solid green candles for Fiverr, right? And a breakout over that $212 resistance. Zach says, "Sup, fools?" welcome on board. So yeah, that right there, Fiverr, $230 is going to be the next resistance level to watch. All right, let's take a look at CCXI. Not sure what stock that is. So it looks like it dropped incredibly on Friday, or even further back on May 7th. So dropped over 61%, 62%. Not really sure what the catalyst is. But right now, again, you know, became very, very oversold. We're seeing that move to the upside. But yeah, I mean, there's not really much to go over on this stock other than, you know, there's a really strong gap that it could still fill here that it left right after the breakdown. Well, in fact, the gap was all the way down here, but we are already starting to fill that gap. So, you know, the next resistance, you know, for this one is going to be sitting roughly at 1729, 1730. And support level I would watch is going to be sitting roughly at $12.30, $12.28. Kind of align those levels. Huge money maker in options. That's good. That's good. So let's take a look at Salesforce, CRM. So CRM has been kind of like in this downtrending channel for a long time until we finally actually broke out of this sort of downtrending channel. So now what's going to happen with this pattern is that we're starting to make these higher highs. So you'll notice that we're actually, you know, going much higher than we did the previous time. At the same time, we're forming some higher lows as well. So this right here is going to be the new sort of uptrending channel for Salesforce. There is going to be a resistance at close to 250. That's going to be this horizontal line you guys see on the chart. So I'll just go ahead and put that price tag here, close to $250. Kind of aligned with this previous resistance, you know, coming in from February 17th. So trading above the moving averages, I would not be surprised if we do get a little bit of a retracement back down to like 233 and then see a breakout over 250, validate that support before making new all-time highs. So $250 resistance, $230 support aligned with those moving averages, and then see a breakout above 250. So let's take a look at AMD. That's going to be Advanced Micro Devices. So AMD down about 84 basis points. No surprises there because the market is down, more specifically for the NASDAQ and a lot of those tech stocks. But $84 is going to be the support. You'll notice that we're just slightly underneath that level. And the 200 SMA sits roughly at 83.79. So I would watch that level, $84. as the next support. And again, this was forming some type of a bull flag, and then we saw a breakout over that level as well. So again, rally higher, consolidation, bull flag, and then a breakout to the upside over $84. My near-term target still sits at $88. Long-term target sits at over $110. But we'll see if that $84 actually validates today. If not, then we're potentially going to make our way back down to like $80, and that's the support level next to watch. Best entry for coin support wise, so let's take a look at Coinbase. So Coinbase is another stock that we actually did sort of invest in. So we're down a little bit over 3% pre-market. So no surprises there, because Coinbase's price is very aligned with of course with Bitcoin, with other cryptocurrencies as well. So that's why it's so important for us to keep a close eye and monitor those asset classes, because it affects companies like Coinbase, like Mara, like MicroStrategy. Mara is another one that I'm actually invested in. But Coinbase 217 is going to be a support. If it comes down to that level today or like over this week, I'll be buying more. And if it comes down to as low as $208, I will be buying some more, because this is a long-term play for myself with a $48 billion valuation. After today's drop, it's going to be sitting roughly at $45 billion valuation. Can't really argue there. And the valuation metrics based on forward earnings, they actually look very, very attractive for Coinbase at these levels. So 217 is going to be the first support level, all the way as low as $208 per share. Yeah, so right now, again, we're seeing a little bit of a rotation back into some of the value and cyclical sectors. So SPY being up over 42 basis points, and the Dow Jones as well. But what you will notice is that if you look at the broader markets, right, and this is the most important, this is, I feel like, a much more important piece than whether we see like this sustained rotation over the tech and growth or not. You'll notice that the S&P has come down substantially from its all-time highs. So we are down a little bit over 2% for the S&P 500, whereas if you look at the NASDAQ, it's testing a resistance, a triple top resistance at close to 14,200. So we're like, spitting distance away from our all-time highs for the NASDAQ. So while this NASDAQ has recovered, the S&P 500 has actually pulled back a little bit longer. Now, if the S&P breaks down below the 50 EMA, that's going to be the yellow line you see on the chart. A lot of technical traders are watching that level for the 50 SMA and the 50 EMA. That's both the yellow line and the pink line. So those are aligned together here. We got a validation here. We did see a brief moment where we broke down below those moving averages, and then we got a perfect validation here as well. But if we do see another breakdown below those moving averages, whether it be today or this week or in the future, or even if it doesn't happen, that's the level that a lot of technical traders are watching, right? Because that's the level that a lot of value companies and stocks have actually broken down. So usually, and again, when these patterns do break down, like I said, for Bank of America and for Wells Fargo, it doesn't necessarily mean that we're going to see a continued momentum to the downside, right? Usually what happens is that they're going to go back up to kind of retest those old support levels, in this case the moving averages, as a new resistance, get rejected, and then sell off. Like, I'll give you a simple example with Tesla, right? So Tesla, you'll notice, I'll need to find a new chart because this is a little bit of a technical piece here. So with the Tesla, you'll notice, let me delete these and I'll bring up some moving averages. So this is what happened with Tesla, right? We broke down below those moving averages, and this was coming on February 22nd. So if you guys remember that day correctly, we were down over 8.5% for Tesla on that day. So once that happens, what happened the days to follow that? We actually went up. So the following day we went up over 2%, and we went up over 6% the next couple of days to go back up, retest those moving averages, and then sell off even further. We went back up, retested those moving averages, got rejected for the second time, sold off even further. Right? So when these breakdowns do happen, in the case of Wells Fargo or like any value company, so to speak, let's take a look at Caterpillar. When these breakdowns do happen, it doesn't mean they're going to continue to go down, right? We're going to continue to come back down. Usually they'll go back up, retest those moving averages, get rejected for the second time, and then break down even further. So I still strongly believe that this is going to lead to a rotation over to some tech and growth names. but it's just going to take some time. It's going to be like exactly what we saw over the last 6 months as we rotated away from tech and growth over to value, right? It didn't happen over a span of a week or over a span of a month. It happened over a span of the next few months as money rotated away from value and cyclicals, or it's going to in the future, in my opinion. All right, so all right, Jason, morning. Welcome on board. So any thoughts on Ford? So Ford, we've also covered during our live streams as well. I think their new truck, the electric truck, is very exciting. It's a great product. I think it's one of the most popular and the best-selling electric, the best-selling trucks in the United States. And now, of course, they're launching an electric version of it. So it's no surprise, why it's also got the pre-orders that it has, and it's going to be in huge demand. So I think Ford is going to be, it's going to do really well with the utility that it has. I think it's got a lot of potential in the future. But it's just that how much of it is already getting priced in is kind of like the real question in the future, right? Yeah, the Ford trucks actually do look really good. And the use case and the application, the utility for them is really strong as well, right? With the power outlets, the charging stations, and it's just so many things that it actually has to offer. All right, so we're about 20 minutes away from the market open. Let's get a quick roundup on the VIX. We're down over 3%. VXN is, again, it's not showing up because it's delayed for some reason here. Let's take a look at the broader trends. So the yields coming down slightly. Financials are up over 48 basis points, with tech being the one that's down the most, about 17 basis points, and all the other sectors kind of together pretty much flat. Up over 7, 10, 8 basis points, with the NASDAQ pretty much up over 6, and the S&P is up over 45 basis points, and the Dow Jones also up over 67 basis points, kind of bouncing back up from that broader trend. I've actually not looked into the Dow Jones here. Let me see if I can. So there you go. So Dow Jones, this is the composite average, but you'll notice that we're seeing a breakdown for the Dow Jones below those moving averages, right? And that was kind of like the uptrend that we were following. So again, validating some of those moving averages, and then we saw a breakdown below those levels. So same thing with DIA. That's going to be the Dow Jones Industrial Average ETF. Even though we're up over 65 basis points, we're seeing that breakdown below those moving averages. DJX. So again, this is going to be the actual, nope. So yeah, I mean, both the Dow Jones ETF and the actual index, they are breaking down below those moving averages. All right, let's go over some stocks here very quickly. So what's up, Michael? Thank you so much for joining in. Looking at NEO at 43. So we're trading at just at 46.85. So yep, 46.30 is the near-term support, all the way as low as $43 per share. Zach, thank you so much for mentioning. Nicholas, thank you so much for mentioning that as well. Make sure that you guys drop a like. It really helps out the channel. Let's take a look at Amazon. So Amazon's staying up there, down about 88 basis points. So again, 35.60, 35.55 is going to be the next resistance level to watch for Amazon, and of course 34.40 is going to be the support level to watch. Let's take a look at Apple. Again, pretty much staying flat. So 132 was the resistance. We're still trading inside the symmetrical triangle. 127 is going to be a support level to watch. What about Riot fundamentally? That's a great question. I haven't really looked into the fundamentals of Riot per se, but I know that it's just really dependent on where Bitcoin trades, only because it's in the business of mining cryptos, or Bitcoin more specifically. So right now, I mean, it's down over 8%, no surprise, because Bitcoin is down over 9.6. So again, it's kind of like a derivative that's trading off of, or deriving its value off of the prices of Bitcoin. But the support levels that I would identify for this is going to be setting roughly the first one at $29. So that right there is going to be the level. Again, previous resistance for Riot all the way as low as $20 per share. And I'm actually personally invested in Mara, so I'm going to be watching this stock more specifically. And again, this right here was kind of like the swing trade that we posted on our Patreon. The idea was to capture 20%. We actually ended up pushing higher to close to 40%, and right now we're seeing a retracement back below that support level. So again, there's going to be some levels to watch. The first one sitting roughly at $24 all the way as low as this $20 range, aligned with that 200 SMA. Shop broke out near 1500. Really? No way. 1473, so it's up over 43 basis points. So Zach, that's a great question. I do take into account after hours and pre-market into consideration. So when you look at the 4-hour charts, 4-hour charts is going to be 4 candles per day, because you're looking into it at it for a 4-hour segment. So you're looking at it from 4 a.m. till 8 a.m. That's pre-market. Then you're looking at 8 a.m. till noon. That's also pre-market and market open. Then noon till 4 p.m. That's regular market hours, and 4 p.m. till 8 p.m. That's after hours. So you're going to get 4 candles per day if you look at the 4-hour chart, which I do like to look at occasionally, because it encompasses all the trading, right? It encompasses all the investors, all the traders trading a stock with real money, and it includes all the orders. When you're looking at the daily chart, it kind of leaves gaps. So, simple example could be, what were we looking at? CCIX, something like that. Or some CCIV, let's take a look at that one, right? So if you look at CCIV, you'll notice that a huge gap left over here. Doesn't include on the daily chart, but if you go into the 4-hour chart, you'll notice exactly what the trading looked like during that sell-off, right? So this right here was the entire sell-off on the 4-hour chart. So I do incorporate 4-hour charts and kind of like those extended hour tradings in the technical analysis, because it goes over all the price action for a stock. But I put more weight on the daily charts, the weekly charts, as opposed to like the 4-hour charts. All right, so what were we looking at? Tesla, let's take a look. Yes, so it does mess up the moving averages because, of course, with the 4-hour chart, you're looking at the 4-hour 200 periods as opposed to the daily chart where you're looking at the 200 days or the 21 days or 50 days. But on the 4-hour chart, you're looking at 20, 21 or 54-hour segments, right? So it's a little bit different. So the moving average more certainly do get recalculated. So yes, daily, weekly, and the monthly chart for long-term price movements to understand the broader trend and the broader perspective on the market. So, it's easier for us to kind of, let's take a look on the other chart that we have. This one. So if you go over to the SPX, that's going to be the S&P 500. If you go over to the monthly chart, you'll know exactly where we're trading, right? And this is also a chart that I shared, in the past, where on the monthly chart, you'll notice the RSI, the MACD, trading at near overbought levels. Of course, every time they have, we've seen a little bit of a correction, 10% here, 20% here, 35% here. And right now we're trading at overbought levels for the RSI. And the MACD also trading at overbought levels, and of course the price has moved up quite a bit. So this was a question mark as to whether we're going to see a pullback or a correction once again, or are we going to see some more persistent overbought levels for the RSI. Now, of course, you can't see that if you're going over the daily chart, right? On the daily chart, all you're seeing is sort of like this price action in the short term. So I think it's really important for us to keep a close eye on what's going on the weekly and the monthly chart as well. All right, so NASDAQ flat on the day. Let's take a look at VIX here, and then we'll jump over to... all right, so let's take a look at Roku. So Roku, the resistance to watch is going to be 375. Yeah, I don't know who asked for that question. But yeah, 375 is going to be the resistance, and the support level kind of aligned at $301. It's also like a double bottom support here. Also got aligned with those moving averages. So the 21 EMA, the 50, and the 50 SMA, and the 200 SMA also sitting right here close to 315. So right now I would say it's very range bound. There's no clear sign of an uptrend until after we see a breakout over 375, and actually do see a breakout over this previous high for Roku in the future. All right, so we got so Clover Health. We also covered Steve, so you can kind of go back on the live stream and check that out, and then jump over to the live stream here. What about AMD? So AMD also, Michael, we covered in the past, like in the previous sort of I don't know. It's been about an hour, so we covered it earlier as well. But very quickly, I mean, $84 is going to be a support for AMD. Right now we're trading slightly below that level, and $88 is going to be the next resistance to watch. So you'll notice that a lot of stocks are trending down because the Nasdaq is also pulling back. So Jason says Bitcoin is going to go to $21,000 watch 1 month. Yeah, I mean that's the fear that if that technical level 30,000, if that level gets broken, and we actually in fact close below that level, because you'll notice that once this entire sell-off began, we actually touched exactly $30,000. So the low for this candle was 30,000, but we didn't close below 30K. We almost tested that level once again at 31,100. We also tested that level at 31,000 here, and today's low is 31,710. So if 30K gets broken, that's the technical level, then Bitcoin has some serious support levels to validate in the future. And Ethereum, again, 1875 is the level. I mean, we're down over 12%, testing those 200 SMA as well. But nonetheless, I mean, if these prices continue to come down, I mean, they're going to represent some incredible buying opportunities, in my opinion. Like more specifically for Ethereum and Bitcoin, because of the use case and the application for it. With Ethereum, with smart contracts and the blockchain technology, I mean, there's a lot of potential for it. In my opinion, for the future for these cryptocurrencies. So this pullback, in my opinion, should be seen as buying opportunities if you are a long-term believer and understand the potential for cryptocurrencies and where they're gonna fit in the future in like this world of finance and fintech and so on and so forth. All right, so less than 9 minutes left. Let's take a look at Pinterest here. So Pinterest is down about 0.5%. So this chart right now is all over the place. Let me kind of redo this. So there was kind of like a double top resistance here for Pinterest. It's close to $88, $87.90. Zach is like just stirring up stuff. Yeah, so crypto ETF, I feel like there's gonna be some volatility questions for crypto ETFs as well, because ETFs in general are supposed to be a little bit more diversified, and of course, including with cryptos, there's gonna be a lot of volatility, and the beta is gonna be really high for that ETF. I mean, ARK Invest ETF is volatile as it is. I mean, and that includes stocks, like 20, 30 stocks, and that thing can go down 10% in a day. Now imagine what would an ETF do on a day like today, right? But Pinterest, there's going to be some support levels at close to this $65 per share level, kind of aligned with those moving averages perfectly, and the 200 SMA right here. It looks like we are potentially on our way up there to 87.90, but we are going to see some type of a pullback before we get there, because the RSI, the MACD, again, trading at near overbought levels, the RSI over 70, the MACD also pushing higher. So for Pinterest, would not be surprised if we do get a bit of a retest of that support at 65 before making the next move to the upside at $88 per share. All right, let's take a look at Workhorse. So Workhorse, I mean, this right here was the prior analysis where I mentioned that I would not be surprised if we do see some more consolidation. But what I do like about this pattern right now is that we're forming some type of lower highs, so like a symmetrical triangle, so to speak. So again, we're kind of making these lower highs and these higher lows where it could lead to a further breakout, and similar to advanced micro devices, it's got a resistance that's aligned with the 200 SMA at close to $20 per share. So that right there is going to be the next resistance, and $14 is going to be a support level to watch for Workhorse. But right now we are forming some type of a symmetrical triangle that could lead to a breakout to the upside, in my opinion. As high as $20, that's the next resistance to watch. So that's a great question, Jiyoung. I mostly put it at the wick of the candle because, again, I like to incorporate and encompass every single trading that's happened. So for wicks, that's where the trade took place. So That's actually a great question. So for the long wick, you'll notice that people actually did buy and sell as high as $18.33 before the stock settled at $14 per share on this day because of the long wick. You'll notice. So again, I try to put it at the wick every time because that is the trading that actually took place. So that it encompasses all the trading that happened for that day. And you can actually even lock, if you're using TradingView, you can actually lock your prices. So if you click on this, lock all drawing tools. Now every time you draw something, I can't show you guys right now because it's more something that you'll feel while drawing this. So it'll kind of draw this on the wick, right? So it'll kind of snag that like a magnet and it'll draw it right alongside with that wick. So I think it's this magnet one. It's not the locking thing, but it's the magnet. So they will be snapped to the closest wick. All right, so 5 minutes left, and we've got this index down about 45 basis points. So we are seeing a little bit of a pullback, but the VIX down over 3.2%. See if the VXN's open yet. And the Nasdaq continues to pull back while the S&P or the Dow Jones is now up over 70 basis points. And the SPY is up over almost 0.5%. What do you guys think? What do you guys think for today? Red or green for the broader markets, and then if not, which sector, which index is actually going to be red, which one's going to be green? So first, is the markets going to be red or green, and then if so, which sector, which index, the Nasdaq or the S&P or? So Monday and Friday scares the. Yeah, Monday we get a lot of volume. Friday we kind of die down on the volume, so it's kind of we get a strong start and then we kind of die down towards the end of the week. So tech sector going to be red. Square, PayPal, and the crypto stocks in red. Choppy. So Jimmy says green. Alex says minor red for the Nasdaq. All right, so we're gonna build out our 4 charts. So I'm gonna put that over here. Let's see. All right, we're gonna put down NEO, which is slightly down. We're gonna put down Tesla. You know what we haven't talked about? We haven't talked about Palantir. How's that doing? Down about 0.5% right now pre-market. And we'll put down AMC, which is up over 4.5%, just trading under $62 per share. ABCL, yes, I'll definitely take a look at it. It's just that the markets are about to open. We'll go over some of these stocks. We'll kind of reshuffle, put some new stocks here, and then switch in between some other stocks as well. So Marcel, what percentage of your portfolio is long versus day trades? So I don't take any day trades. I don't day trade. I only swing trade, and I have long-term positions. Long-term position makes a majority of the portfolio. So I don't have stop losses. I have price targets on those companies, like for example, AMD 110 price target, Amazon $4,000 price target. So those are my core long-term positions. So I don't have a stop losses on them. But when I'm swing trading, yes, I do have stop limits, either a hard stop loss or a mental stop loss. Hard stop loss, not so much, because it you'll get triggered, you get pulled out of that position, and the stock may go in the right direction as you anticipated. Mental stop loss more so because it allows me to kind of not be in that stop loss per se, so that I can really get out where I want to get out, as opposed to getting pulled out of that trade because you already have a hard stop, if that makes sense. So I don't trade options right now, but I'm actually learning more about them, and I'm going to be establishing a few strategies like leaps and selling covered calls and things like that to actually get into that eventually. So yes, what is the difference between day trade and swing trade? Day trade is basically you are closing all of your positions out within the same day. So you're buying today and selling today. That's a day trade, so you're holding it for one day. And swing trading is anything more than one day but less than a year. So you're swinging that stock for more than a day, so you buy it today and sell it either tomorrow or sell it, over the next few weeks or a few months, but always less than 1 year. If it's more than a year, then it's a long-term investment. All right, so the markets are opening in 3, 2, 1. So NEO is down. Okay, so we got a huge down movement, over 1.3% all of a sudden. Tesla's down. Well, Tesla's up slightly over 13 basis points, with Palantir down over 1% as well, and AMC is up over 4.79%. But NEO had a strong move to the downside all of a sudden. As soon as the markets opened, this candle just flushed all the way down. We're down over 85 basis points, and Tesla also turning red. Let's take a look at the markets here. So QQQ is seeing a little bit of a recovery. We're pretty much flat on the day, with the SPY up over 0.5% right now. Ethereum down about 12% still. Bitcoin is down over 8.6%. No changes there, and we're seeing a little bit of momentum kick in for Tesla, up over 0.5%, with the NEO also trying to push back up. And AMC is up over 4.5%, trading just under $62, even though the high for the day is $62.39. Just gonna change the color of the wicks here. Palantir is down over 1.4. So AMC is up, Caterpillar is up. There you go. Shopify is up, but everything is only flat on the day. There's more stocks that are red than there are greens, right? So a lot of stocks are actually in the red because of the broader markets, more specifically the Nasdaq. So NEO's down over 1.7% now. And Tesla pretty much flat on the day. Let's take a look at AMD over here. So selling off, down about 1.4, trading under $84 per share. So 84 is going to be the level that we need to watch if AMD can actually close above that level, or if you're going to break down below the 200 SMA. But a lot of selling pressure coming in for tech. So NEO's down over 2% now. AMC reversing a little bit, so we're down over 2.6% for AMC. Well, we're up over 2.6%. Sorry, we're up over 3.36%. We're seeing a little bit of a pullback from where we were. So DraftKings is down, Fubo TV is down, PayPal is down, NNDM, Palantir, Plug Power. Twitter's down over 67 basis points. Corsair Gaming. You got Trade Desk, Amazon's down about 0.5%. Facebook, Apple, both down about 9 to about 30 basis points each. The stocks that are in the green, there's only like a handful. Doesn't even fill the full sort of page here. So yeah, only Visa, CVS, Johnson & Johnson slightly in the green, but the ones that are actually green by a lot are AMC is up over 3% and Caterpillar that's up over 2%. So one thing that you guys have to remember here, like this is something that I want to address once again. Tech selling off today or even this week is not a sign of once again shifting that trend. What's actually happening is that we're seeing a breakdown for those patterns, like I went over for Dow Jones and the S&P 500. And we're only seeing a bounce back higher for those indices, in my opinion, right? It's exactly what we saw when Tesla broke down. Tesla, NEO, Apple, Amazon, all these companies, they broke down, they went back up to retest that old support as a new resistance. So that is like the went back up phase of value, in my opinion, because if I bring up the Caterpillar chart once again, or 3M or Bank of America, Wells Fargo, like these value companies, So let's go over to Caterpillar. You'll notice that we did break down, and right now we're seeing just a bounce back higher, right? Just a bounce back up. So this is a shift in the trend. Like it's going from an uptrend to a downtrend, but we're seeing that move to the upside once again. Now, usually, again, this is my opinion based on the analysis that I've actually learned for other stocks as well, and that's what happened with tech and growth, is that after this breakdown, we come back up, get rejected, and then we sold off even further. And that's the same thing that we looked at for Dow Jones. Is, you're seeing that momentum kind of break to the downside, and we could see like a recovery back up to those moving averages, get rejected, and then pull back once again. So, all right, Tesla's down about 64 basis points, with NIO down over 2.5% here, and AMC is up over 5.75%, with AMD down over 2% as well. A lot of tech stocks absolutely selling off. Yep, so Square, NIO, Nvidia, PayPal is down. Palantir is down over almost 2%. So let's pull up Palantir over here. So down about almost 2%. Netflix, Twitter, Corsair Gaming is slightly up. Let's take a look at the stocks that are actually in the green. It's hard to find stocks that are in the green right now. So, all right, so Corsair pretty much flat on the day. AMC is up over 5.6 and Caterpillar is up over 2.2. And again, John Deere, or like Deere and Company, up over 1.8. Shopify, GME, they're up as well. So, but look at this. Look at this watch list, right? Mostly the value companies. We've got CVS, we got Johnson & Johnson, we got Procter & Gamble, we got what is this? McCormick and Company. We got Deere and Company, we got Caterpillar, and of course AMC and GME are different. Like they're a whole different sector. They're not growth, they're not value. And then we could take a look at some of the other stocks. Nothing is green on this side. Nothing on this watch list. BNGO, NNDM, Clover Health, NanoX Imaging, Fubo TV, Workhorse, Rocket Mortgages, CCIV, Plug, Skills, MP Materials, Lordstown Motors, everything red across the board here. Banks, handsomely in the green, but this is again a good representation on which banks or which financial institutions are green and which ones are red. Visa, I'll put Visa in the same category. It's slightly up, but Visa, MasterCard, PayPal, and Square, like those fintech stocks, are actually red, but traditional banks are green after the sell-off that we saw, right? So Wells Fargo, Bank of America in the green slightly right now. Let's take a look at energy. So energy is once again pushing higher. So Exxon and Chevron in the green, with some of these recovery stocks like Waste Management, Walmart, 3M, Bank of America, Walgreens, Ulta, they're all in the green. So again, recovery is picking up, value is green on the day. Right, so the Nasdaq down about 40 basis points, with the S&P is up over 34 and the Dow Jones is up over 80 basis points. Right, so NIO is down over 3% right now, and Tesla is down almost 1%. Marcel, there is non-techy, well, non-tech if that's what you mean. So we do have non-tech on the list here. So we got Dow 30 over here. So we got all the banks, we got all the energy stocks, we got all the value plays as well under recovery. So we've got all these as well on the watch list. So we do have non-tech companies as well. So this right here, Palantir, quite a steep drop of over 3% here for Palantir. Yeah, so AMC's up over 4.3, Caterpillar's up over 2.65. So Caterpillar is seeing a massive recovery, right? So strong recovery for Caterpillar happening right now. Back up to potentially, again, 229, 230. We'll see if we actually do get that reversal. That's going to be a jump of 6% from our current levels. And the Dow Jones, of course, seeing that recovery as well. 340, 339 is going to be the resistance level for us to watch for the Dow Jones. So Adam, why is tech struggling? That's a great question. Again, I want to mention that. Let's take a look at the yields here. Let me bring up the yields very quickly. So the yields are up over, what is it, 2%? If you go over to our main chart that we have talked about, you'll notice that this is the analysis on the yields. So daily chart does suggest that we are inside this lower highs and lower lows pattern, but we did hit our lower low and we're potentially on our way back up to these lower highs. So if you do go back up to this level, that's going to affect tech heavy NASDAQ more so than it affects the S&P or the Dow Jones. So that's one of the reasons why we're seeing the NASDAQ pull back a little bit. But another thing I want to mention is that the Dow Jones actually broke down, and right now we're seeing just a back test of those moving averages once again. So the real question is the Dow Jones, in this case the ETF, going to break out over 340 once again, continue on this uptrend, or if we're going to see... So there's two options, and I want you guys to answer that as well. The first scenario is that we see the Dow Jones push higher and break out over this moving averages and continue on this uptrend like that, right? Higher highs and higher lows. That's what we've been doing for the NASDAQ, for the Dow Jones for a really long time. Or whether we're going to push higher, get rejected, and then break down even further, make lower lows. So which option you guys think is more likely in the future for the Dow Jones out of these two? Because right now we're up over 78 basis points after the breakdown that we saw earlier. There was a negative divergence here, so it's no surprise that we're seeing a little bit of a push higher, because look at the RSI, right? Look at the relative strength index. It was so oversold. It was trading closer to 28, 29 levels. So we were definitely very, very oversold, and we're seeing a little bit of a recovery, right? So that's normal. But the real question is whether we push higher, we break out once again and continue on this uptrend like we have in the past. This is the uptrend. So boom, 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 just rallying higher on those moving averages, or after this breakdown, we retest, get rejected, and sell off even further to make lower lows. So Coinbase, let's take a look. So down about over 3.65%. That's very normal because Bitcoin prices are down, right? So Bitcoin again selling off quite aggressively. So it's down over 8.5%. So it's very normal that Coinbase is down over 3.6% because it's trading off of Bitcoin's price. Even Mara is down 4.8%. Very normal. Riot is down over 4%. So yeah, so Dow was just very oversold from Friday. We're seeing a little bit of a recovery, and with the yields pushing higher, of course, it's not supporting the tech-heavy Nasdaq. Look at the VXN, up over 10% right now. So if it does retrace back up to 25.6, that's going to be our indication to go long on the Nasdaq again. And this was covered in our market update from over the weekend, right? We went over the VIX and the VXN, and the VIX is coming down once again, down about 1.83%. All right, let's go back up to this 5-minute chart here. Even though I don't want to, NIO is down over 3%, Tesla is down over 1.3%, and Palantir is down over 3% as well. And AMC is only up over 1.8%, so we're seeing a little bit of a pullback for AMC stock. So we would be at a triple top for the QQQ ETF. So for the Nasdaq, yes, if you were to extend this level right here out here, then that is a triple top resistance for the Nasdaq. So yes, you're absolutely right. However, if you look at the broader trend here, there seems to be strong higher lows, right? So I mean, in the grand scheme of things, if you look at the pattern here, the Nasdaq seems to be forming some higher lows, or the ascending triangle, so to speak. So even if we do pull back, and again, this is kind of like my theory about the markets right now. So I want you guys to picture simultaneously what's going on. We have the Dow Jones on one end, which is breaking that trend, but we were seeing that recovery back up because A, it was oversold on Friday, B, the yields are pushing higher, and C, usually when the patterns break down, they go back up to retest or backtest old support as new resistance levels. That's the moving averages that we broke down. The Dow Jones is going back up to retest that level. And my expectations is that we're going to, again, find that as a resistance and come back down to make lower lows. While that happens, the VIX or the VXN, that's the NASDAQ heavy, is going to potentially go up to 25.6, 25 levels, right? So that's what's going to cause this volatility index to go up to 25.6. That's going to cause the NASDAQ to actually come down. And you'll notice that this pattern is actually forming. So we come down, we push up, we come down, we push up. And while the Dow Jones goes up, the VXN goes up, we see the NASDAQ come down to the support. And eventually I expect a breakout from this ascending triangle for the NASDAQ index. So right now we're sitting just over 14,000. And again, this could be completely off a few weeks from now, but as I see it from the broader markets, this is what I'm expecting in the future as well. Because if you take a look at the yields as well, they're downtrending, right? They're making lower highs and lower lows. So it's no surprise that we're seeing some recovery, but the broader trend is still down. We're still making lower highs and lower lows. So to become a bearish triple top, would it have to break 13,000? So it already is a triple top here at close to 14,200 for the NASDAQ. You'll notice again that sticker symbol IXIC. So it's kind of hovering around 14,000 right now. But that is kind of like the ascending support or the higher lows that I'm also seeing for the NASDAQ index. So in the grand scheme of things, you'll notice that we're also forming some type of a, bull flag or like a bull ascending triangle, so to speak, that could lead to a further breakout. It's only a matter of when instead of a matter of if, in my opinion, because once that supply gets absorbed, once that selling pressure gets absorbed at the top, we could see a strong breakout to the upside. Let's take a look at Zoom. Nope. Alright, so Zoom right now down about 2.7%. So I feel like there was some bullish divergence here or a positive divergence because the RSI reading was very intact at that support at close to 29 while the price continues to sell off. So this right here continued to make lower lows while the RSI was pretty steady there. So we did see some type of recovery. So this right here was kind of like a falling wedge, so to speak, for Zoom. So now we're seeing a little bit of a breakout outside of that level. So the next resistance to watch for Zoom, in my opinion, is going to be sitting roughly at 400 to like 405. Only because we've gotten rejected at this level in the past. So again, we might make our way up there before or after kind of coming back down to validate some of those moving averages before making the next leg up higher. So for Zoom, keep a close eye at those moving averages at close to 350, and resistance is going to stay put at 400. Red days equal buying days. I couldn't agree more. Yes, so definitely agree that if you're seeing a little bit of a pullback here or a sell-off across the board, that only means that the risk is coming down, right? The risk is coming down. Let's take a look at NVIDIA and where that's trading. So NVIDIA is down a little bit over 2.83% right now. Alright, so Palantir down over 2.48. AMC is still hanging on, up over green, 1.86% in the green right now. With Tesla down over 1.3 and NIO down over 3% as well. Mind going over Patreon tiers real quick. So if you have any questions, just let me know in the live chat. I'm happy to answer any questions about that as well. I think we only have like 5 spots available. So So I'm going to be live streaming for like another 15-20 minutes right now. So rates down, tech and growth stocks down. This market's totally makes sense. So rates are actually up. So if you take a look at the yields, the 10-year yields are up over 2.34%. So Alex just woke up to look at the markets. Welcome on board. Grab a cup of coffee if you have to, because the markets are absolutely, tech more specifically, are absolutely getting crazy right now with the Nasdaq. Well, it's recovering a little bit, so I'll give credit where credit's due. So if you take a look at the QQQs, the 1 minute chart or like the 5 minute chart. Well, that's the thing. That's a little bit strange here, where the QQQs are down over 40 basis points, but the underlying index that it's supposed to follow, the Nasdaq, is only down 19 basis points. Like what? Like this right here, IWF, the growth ETF, that's doing a really good job following the underlying benchmark or the growth index or the Nasdaq. But it's kind of strange that the Nasdaq ETF is down almost 0.5%, but the underlying is only down about 20, like half that. So Mark says, can you check CX? Is it this one, Mark? CX? Up over 2.7%. Seems like the volume's really low on this one. So Snapchat was, I think it was one of the first stocks that we covered, Leon. So I think you can go back all the way to when the live stream began. And you can kind of check the analysis on that. But all right, so CX, Mark, if this is a stock that I can take a look at it, I'll keep it open. But whoa, look at NEO, down over 3.7%. Tesla is down over 1.7%, and we've got AMC is up over 1%. We're still struggling at that $60 level, and we got our Nvidia down over 3%, and let's take a look at AMD, down over 2.72%. Let's take a look at Palantir, down over 2.72% as well. Roblox is trading exactly at $80. So Roblox, we had a video over the weekend how this is testing its 50 EMA. So trading exactly at $80. That's a support level to watch for Roblox very, very closely. But Upstart down over 2.5%. The entry for Upstart, in my opinion, is closer to 109 or 110. That's the level that we talked about. If it comes down to that level, I'm definitely going to be establishing a position there for Upstart. But Square down over 2.6, trading as low as 230. And of course, Fubo TV is down over 2.7. Neo's down, of course. Clover Health down over 4%. We're seeing those breakdowns come in even further. Alright, so what are the biggest risks with the current state of the markets according to you? Only been investing for a short time. Always seeing comments about the market crash of some sort. I think the biggest market risk right now is going to be inflation, because that's what's going to drive the market narrative, and that's what's going to drive people's expectations of future returns moving forward. Now, in the future reports, we've got another one coming up in July. July is also going to be another month where we have another FOMC meeting. We've got another Jerome Powell speech. We've got another round of unemployment numbers coming out, another round of CPI, PPI data coming out. So what we need to see over the future quarters and future months of CPI data is a deceleration in growth. If inflation continues to run hot, and right now we're sitting at multi-decade highs, highs from 2008, 2001, like 10-year, 20-year highs when you look at total CPI, core CPI. If that comes in a little bit hotter than expectations in the future, continues that way, then interest rate talks are going to get more and more sort of aggressive from the Fed, and they're going to shift their focus eventually to potentially raising rates. That's what's going to hurt the markets, more specifically on the longer dated stocks, which are growth and higher PE names. So Yura says, I hate the stock market. I mean, you gotta love the stock market on days like these. I mean, this is, of course, there's companies that are up. So like, look at the Dow 30. JP Morgan's up, Exxon Mobil, Coca-Cola, Walmart, Nike, Pfizer. I mean, Boeing is up over 1%. Like, these stocks are up. But tech had a really strong week last week, and we're seeing a little bit of the little bit of a pullback. Just a bit of a breather. We saw NEO down over 3%, I believe, during this entire uptrend when it had some type of a pullback before rallying even higher. So remember, this is what I tell our members in our Patreon Discord as well. When stocks come down, your risk comes down with it. When stocks go up, your risk goes up with it. Right? When stocks are trading at all-time highs, your risk is much higher. When stocks are trading at 52-week lows, they're trading, really at support levels or are trading at a discounted price, your risk goes down with it, right? There's limited downside left. Red is the new green. Yes. Let's take a look at AMD here. Down over 2%. So yeah, I mean, what is it? Nvidia's Square is down 2%. Nvidia is down over 2.7. Let's take a look at Amazon. Down about 37 basis points. NEO seeing a little bit of recovery, down about 2.79, and Tesla's also down 1.2. Let's take a look at the broader market. So VXN up over 4%. So we are seeing a little bit of a pullback, right? Earlier it was up over 10%, and now we're seeing it being up over 4% for the VXN. And the VIX really selling off, so we're now down over 7% for the VIX. So look at that, QQQ is seeing that recovery here. And SPY is of course up over 72 basis points. And let me guess, Dow Jones is probably up over 1%. Yep, 1.06%. The Dow Jones. The damn Dow continues to push higher. Makes tech and growth look like fools. Seriously, this has been the pattern for the last 6 months. But yeah, I mean, just still seeing a little bit of recovery here. NEO has a good support at 45. Let's take a look. So NEO on the daily chart we has a support at 46.30. Well, that's going to be turned into a resistance after today if you do get a close below that level. But $43 is going to be the next support level. Now we have the 21 EMA also sitting at 42.80, but closer to $43. That's going to be the level to watch for NEO. All right, let's take a look at back to 5-minute chart here for NEO. So AMD is coming back. We're only down about 1.84%. Amazon's also coming back a little bit, and so is Tesla trying to push higher a little bit. But with this aggressive sell-off that we saw, it's going to be difficult for these patterns to get turned to actually in the green. But you'll notice, I mean, again, I'm kind of surprised that the NASDAQ ETF QQQ is not doing a great job kind of following its underlying index. I mean, this thing is down one basis points while the actual index itself is up 20 basis points. Like, take a look at this. So SPX, that's going to be the actual index. So S&P 500 index is SPX, up over 68 basis points. And SPY, which tracks the underlying index, is also up 70 basis points, 72. But we're seeing that difference from the underlying index of the NASDAQ and the QQQ. So that's really interesting. I mean, I haven't seen that. I've seen that in the past, but it's very rare to see the underlying index not, or the ETF not follow or track the underlying index appropriately. So difference because of the expense ratio? No, I mean it should have the expense ratio already kind of priced into the price, but it could be just because it could just be the holdings itself, or it has to do something with the contracts that it's kind of contains within the ETF. But it's kind of hard to say why it's not following perfectly with the Nasdaq itself. Like, we're still down for the QQQ ETF. Like, it really sucks for anybody who might be trading, like, options on QQQs, or might be buying the actual stock, and the index is up while the QQQ is not getting priced appropriately. Alright guys, so it's 10 a.m. I'm going to probably end the live stream here. I'm going to spend some time with the Discord members and our Patreon members. If you're a part of it, you will see me there. Feel free to ask questions. As always, if you enjoyed the live stream and enjoyed the work here for pre-market, and make sure that you drop a like. It really helps out the channel. Also, make sure that you check out the Webull and the Patreon links down in the description below. I think we only have like less than 5 spots available, and after that it will be closed permanently. The Patreon will be, but again, Webull link if you guys want to get access to 2 free stocks as well for $18.50. So again, thank you so much, and I will be in our Discord. As always, happy investing. Hope you guys have a great day. I know the markets are down, but it's only a small blip in where we're going over the long term, in my opinion, right? So I'll be live again sometime this week. So happy investing, and I will see you guys in the next video. Cheers.